Okay, well, good evening, everyone. I wanted to welcome everybody to Family Promise of the Verdugos Money Matters workshop series here on Zoom. We've been doing Zoom workshops over the last year during COVID. We used to meet in person doing these workshops throughout the Burbank and San Fernando Valley areas. And now we're using technology to spread personal finance information, personal financial planning information, and just helping ourselves continue to progress and manage our finances better, even during this pandemic. And so our topic this evening is understanding Social Security. And so what I'm going to do this evening, my name is Bryan Schwartz. I'm a financial planner. And I help FPV run this Money Matters series. I'm going to be walking through Social Security, the basics of Social Security this evening, and just touching on some of the big picture questions about Social Security. What is it? What are the benefits? How do those benefits work? How do we qualify for those benefits? And how do we start collecting them? And several key takeaways from our Social Security benefits, just so that you can have a good sort of overall big picture of Social Security. This is not meant to be a completely comprehensive, in-depth study about Social Security. I'm not going to inundate you with charts and graphs and that sort of thing. I just want to, at a higher level, talk about sort of the planning behind how Social Security works and how you may, as an individual or within your household, be incorporating Social Security in your future retirement plans, or to provide extra monthly income when you retire if, God forbid, you were to become disabled, or these benefits for any surviving family members if something were to happen to you. So with that being said, we're going to go ahead and get started. And as we begin to talk about Social Security, I did want to mention one thing. Since last workshop session, we talked about taxes and prepping for Uncle Sam. You may have seen, but I just wanted to make a general announcement that the IRS has given us an extension on filing our 2020 taxes. So normally that would have been due April 15th. And at the beginning of the year, it looked like the IRS was going to hold that date up and make that our deadline. But just recently, within the last week or so, they've extended that. So the new IRS federal tax return filing deadline is May 17th. May 17th. So basically giving us an extra month. So if you're still working on your taxes and you were starting to panic that the year was moving by quickly and you're running out of time, they're giving us now till May 17th. So just wanted to mention that. Let me go ahead and advance our slides here. Right off the bat, I want to give you a resource that some of you may already know about. If it's been a while since you've seen one of your Social Security statements, this is a great resource. The Social Security Administration website at ssa.gov is a great place for you to view your online Social Security statements. And on those statements, you can see your work history, your earning history, and a basic calculation based on your date of birth as of right now, what your Social Security benefit or payout, monthly payout would be at a specific age, 62 and above, should you be deciding to target an age in which you would want to retire. Also on the website, there are benefit descriptions in greater detail of what we talk about tonight. There's calculators that you can use to do various calculations to see what would be the advantage of me waiting and taking my Social Security, collecting Social Security at an older age versus a younger age. There's some calculators on the site that you can play around with to see sort of how those numbers would change, and you could do some planning and some projections with the calculators. Also, too, you know, they've always said that's one thing you never want to lose is your Social Security card. You can get replacement Social Security cards. If you've lost one, you misplaced it, you can go to the website and get a new card, a new replacement card issued for yourself. So it's a really handy website. And for those of us who are older, you may know that for the longest time, the Social Security Administration would mail you through the post office, through snail mail, would mail you your annual Social Security statement. And for quite some time, years ago, the Social Security Administration wanted to go paperless. So they created the website. They created a way for you to create an account and see your statement online in an electronic version. And they were really, really trying to go paperless. And for a large portion of seniors and the aging population, just navigating the technology was too much for them. And I think the Social Security Administration got enough sort of input, advice, and recommendation, and maybe complaints, and they went back to mailing statements. So if you've seen those reappear in your mailbox, that's the reason for that. But the Social Security Administration is still upkeeping this website. And it's very handy, very, very handy. One thing I do want to mention in conjunction with the website is if you're thinking of doing some Social Security planning, you may know that in various counties and areas, there are Social Security Administration offices. And the offices really discourage people from setting an appointment and coming in just to talk about Social Security, just to talk about planning, just to talk about projecting your Social Security and maybe getting some advice and recommendations. They really want to be able to serve those who are going to start and file for their Social Security benefits. So you may encounter some difficulties if you want to just go down to the office just to talk about Social Security. So if you have a situation where you're needing to file and start your retirement benefits, or something has happened in your household and you need to claim disability, or you need to claim survivor benefits, well, then the Social Security offices are going to set an appointment with you because there's work for them to do. So I just wanted to let you know that over the last decade or so, as I've had clients and people ask about that, they're always curious, can I just go down to the Social Security Administration to talk to them about, is my benefit going to be taxable and how should I plan? And they really just want to work with people who are in the process of filing for those benefits. So just a little FYI there. Okay. So on our slide here, just below the website information in blue there, these are the 5 sort of areas that we're going to cover tonight. What are Social Security benefits? It's more than just retirement. How do they work? How do I qualify for it? What could I potentially be collecting, and when should I start collecting? And sort of some big picture takeaways. But before we get into all that, I want to make sure that we sort of understand a little bit of history behind the Social Security Administration and where that all started. I mean, really, Social Security is a more, how should I say it, recent development or invention, if you will. Back in 1935, FDR, Franklin Roosevelt, our president at that time, coming out of the Great Depression, saw that there was a large portion of the American population, obviously, that had been just crushed financially by the Great Depression. And that there were many individuals and families that were in need of help. So the Great Depression had left many Americans, millions actually, penniless. And so in 1935, as part of his New Deal program to sort of beef up the financial resources of our country, and help the most vulnerable citizens, they created this social program. And this government program provides financial assistance to individuals with little to no income. Because this was the first experience in which we really saw people who were ending their working careers sort of being crushed under the burden of losing out financially. And the government decided that we needed to provide for the elderly, we needed to provide for the disabled, their children and their widows, so that they wouldn't end up impoverished. So more than just Social Security benefits, the Social Security Administration, as it came about back in 1935, actually was trying to provide 3 different benefits to Americans. One was obviously retirement, right? Provide financial resources as not a full replacement of income in retirement, but a partial replacement of income in retirement years. They were seeing Americans living longer and seeing that Americans could potentially be in retirement for 20 plus years. And now in our present day, we with medical technology know that many of us, because of medical innovations and research and medications and a robust healthcare system, we're seeing people living in retirement for 30 plus years. And so a big concern of many retirees is, I don't want to outlive my money. And so Social Security becomes another layer of income in someone's retirement plan. We'll talk more about that. The second benefit that the Social Security Administration was set up to provide was for disabled workers. Those individuals who would not be able to work anymore due to a disability. And we'll define what that actually means, because in order to qualify for Social Security disability insurance, you have to meet the sort of the criteria and the qualifications of a very sort of strict definition of what disabled actually means. And Social Security Administration wanted to provide benefits to survivors, to widows, to children of workers who had passed on. We'll talk more about some of those definitions as well. But as you can see from this pie chart here on this particular slide, 81% of Social Security Administration funds are going to retired workers, their dependents, and their widows. So that first benefit of retirement is where a majority of Social Security funding ends up going. So right now, there's approximately 65 million Americans receiving Social Security Administration funding in some way, shape, or form through these 3 benefits: retirement, disability, and survivorship. So that's quite a large portion of our population that is depending on Social Security. And we'll sort of get into a little bit about sort of the longevity of Social Security. And you may have heard sort of rumors going around that at some point Social Security would run out and be defunded and would run out of money. And we'll sort of discuss that here in just a second. But as we can see from the graph, a large portion of it goes to retired workers and their dependents. So how does Social Security benefits work? Let's break this down a little bit. Sometimes there's this misconception that the Social Security funds, there is some fund that is created and funded by the government itself. But if you're paying close attention to your paychecks over the years, you've seen that there are payroll taxes that are being deducted from each one of your paychecks. And those payroll taxes are actually the main funding source for Social Security benefits. And typically, benefits are funded through 2 different kinds of payroll taxes: FICA and SECA. So depending on the kind of worker that you are, if you are employed by an employer, you are paying FICA tax based on each of your paychecks. That FICA stands for Federal Insurance Contribution Act. And so what you are paying in terms of Social Security tax in the form of FICA on your earnings is approximately 6.2% of each of your paychecks goes towards Social Security. Now, I want to be clear that what you're paying in taxes for Social Security is funding the current benefits for retirees right now. So sometimes people will ask me, oh, so the taxes that are being taken from my paycheck, that goes into my sort of personal fund that will be used for my Social Security payout in retirement? No, it does not work like that. Our current taxes on our paychecks pay for the current Social Security distributions for retirees, people on disability, and survivorship benefits, right? Your employer also pays the same percentage, a 6.2 employer tax on your earnings as well, right? So the employer is contributing, you as the employee, you are contributing, and these two contributions go towards funding the current distributions. So it does not go into sort of your own personal bucket for Social Security, right? And so that's why we often hear a lot, wow, the baby boomer generation, that population that is currently retiring, is retiring at such a rapid rate, and their distributions are outpacing what we're paying into Social Security based on this tax, that's where we start to hear worries of, wow, Social Security will run out. And we'll talk in just a second about why there are a number of ways that the government can continue to extend Social Security benefits. But I just wanted you to be aware that we are paying into Social Security now. It's helping retirees now. And then ultimately, when we retire, somebody else's taxes are going to be funding our retirement benefits. If you are self-employed, you are paying your payroll taxes through SECA, which is Self-Employed Contribution Act. And that's for self-employed workers. And because you don't have an employer, you are paying the full 12.4% Social Security tax, okay? So you don't have an employer, you are the employee, and you are acting as the employer because you're self-employed, you're paying the full 12.4 Social Security payroll tax, okay? So that's where the funding comes from. And now, how do we then qualify for these benefits? First, how would I qualify for retirement, Social Security retirement benefits? In order to qualify for Social Security benefits, okay, you typically must have worked for at least 10 years. That's the minimum, 10 years of employment, right? And while you've been working during those 10 years, you had to have paid your FICA tax, paying into the Social Security program. And as you do that, the Social Security Administration gives you credits, okay? So they are keeping tabs on how many years you've worked, paying your FICA taxes, and by doing that, they give you credits. And you can earn a maximum of 4 credits per each working year. So if you work 10 years, you get the maximum 4 credits a year. You accumulate 40 credits, you're able to qualify for Social Security benefits. Now, I'm going to explain sort of another component to that here in just a bit, because the Social Security Administration also tracks some other things. But let me let me just talk about disability, and then we'll circle back to that. Right now in 2020, the average American worker has a Social Security benefit of just over $1,500 a month. Now, sometimes you'll see some workers earning more. Maybe they're getting $2,000 a month. And then sometimes you'll see workers getting less. And maybe you'll look at your statement, and based on your full retirement age at 67, you may be getting a completely different figure. It depends, because everybody is different, has a different date of birth, has a different work history, has a different sort of schedule of paying into Social Security, and has different earning amounts. All that sort of goes into the calculation to determine your final monthly benefit. But on average, in 2020, the American worker who has worked the minimum of 10 years, accumulated the 40 credits, has paid into FICA, is getting somewhere around $1,500 a month. So off of Social Security alone. That may be possible under very specific special circumstances. Probably not going to happen if you're trying to rent in LA County. Maybe it could happen if you owned a home and the home was paid off and you didn't have a mortgage. But you could see where $1,500 a month, based on the high cost of living in LA or Los Angeles County, $1,500 would not go very far. Based on your living expenses, based on your bills, your fixed expenses, we really have to I say all this because we really have to think of Social Security as sort of icing on that income cake, right? Where maybe you've been saving for retirement in other ways. Maybe you have cash, savings, checking. Maybe you have money market funds. Maybe you have an IRA. Maybe you've been investing for retirement in an IRA, in a 401k, in a 403b, other retirement accounts. In order to have various streams of income, Social Security has to be an additional stream. So unless you're living in a different state, you have very few, if any, expenses, right? Then you may be able to rely on Social Security as your sole source of income. But really, we have to think of Social Security as just that, icing on the cake, right? It'll be an additional stream of income in retirement. To qualify for disability benefits through Social Security Administration, it can sometimes be difficult because the Social Security Administration enforces strict sort of guidelines about qualifying. In order to qualify for disability benefits, one, you have to meet the definition of disability for them. And for them, that is ultimately anyone who is unable to work for a year or more because of a disability. So you would actually have to prove that you're unable to work, that you've been unemployed for over a year, and it's due to a disability. And that's gathering up documentation, medical documentation, doctor's notes, and so on, to be able to prove, if you were to file for Social Security disability, that you indeed meet that definition. So you couldn't have gotten just injured on the job, gotten some workers' comp, and now you're looking for work again and you're trying to go back to work. Social Security is going to say that does not meet our definition of a disability, right? So you have to meet that definition, right? And the second criteria is you have to have worked long enough and recently enough in jobs that were covered by Social Security, meaning you've been paying into the tax, right? You've been paying the FICA tax, paying into the fund of Social Security, right? So you have to meet that definition. On average, Social Security disability benefits for somebody who qualifies is getting, on average, just over $1,200 per month, right? So again, it's probably not a full income stream. It's maybe another layer of income if you're disabled that you're needing to rely on, right? Let me circle back now to number one in terms of retirement. Something else that Social Security also keeps track of, in addition to the 10-year minimum and your 40 credits, is, and you'll see this on your annual Social Security statement, is they keep tabs on your earnings, because they want to use those earnings as part of the calculation to determine, based on your working career and what you've been earning over the life of sort of your professional career, they want to be able to calculate an average, right? So that your Social Security benefit matches, not exactly, not 100%. Actually, it's really only 40% is what the average is. Social Security will give you a monthly income that replaces approximately 40% of what you earn during your highest earning years. They get that from taking your top 35 highest earning years. So sometimes you can look at your annual Social Security statement and see, oh my gosh, that first job that I had when I was 16, and I was making like $7 an hour, $5 an hour, whatever it was, and I only earned, $1,200 that one summer. You might have paid into FICA at that time. That's probably not one of your highest earning years over your 35-year working career. But that's what they're looking for. They're looking to find your 35 highest earning years. They total all that up. They find an average by dividing it by the total number of months that you've worked in those 35 years. And then they round that average to the next lowest dollar. And that helps in determining your monthly payout, right? But as I'm about to show you, your monthly can vary depending on the age at which you start collecting. So let's talk about that here. And again, I want to reiterate that on average, Social Security monthly benefits are about 40% of sort of what you were making in your highest earning years. So it is not going to replace your income 100%. Right? So for example, if you've been living off of, let's just use even numbers for easy math. If you've been living off of $100,000 a year, Social Security benefits are not going to give you $100,000 a year. Only about 40% of that. So call it close to 40,000 is going to come from Social Security benefits, right? So if things were tight living in LA off of 100,000, imagine then retiring, solely relying on Social Security and now having to live off of $60,000 less, right? And that's why other streams of income in retirement, from investments, from savings, some people tend to work longer just because they're healthy, they want to stay mentally sharp, and they can do that. All those things combined can keep them paying their bills, paying their expenses, and so on, right? So Social Security only replaces approximately, on average, 40% of your highest years of earning income. Because if you think about it, $1,500 a month for 12 months, I mean, that's, $18,000 a year, right? On average, that people are getting from Social Security. So the question that people always have is, all right, Bryan, it's going to be a piece of my income, but when can I actually start getting it? When can I start collecting? Okay. You can claim Social Security retirement benefits, okay, as early as age 62. So let's say you've been a saver, maybe you have some real estate, you have some property, you own your home, your expenses are low, and you want to retire early. You want to claim at 62. You can do that. you can claim at age 62. That is not what Social Security calls full retirement age. Okay. So you can start claiming at 62, but your monthly payout is going to be a lot lower because you started earlier. Okay. You started earlier. So you can claim at 62, your monthly is going to be lower. If you were born in 1960 or thereafter, full retirement age for us is 67. And what do I mean by FRA, or full retirement age? It's at that age where the government and the Social Security Administration see you as, this is what we've defined as retirement. Okay. So this is retirement for us, 67. You can claim earlier, but this is sort of standard full retirement age. For every year that you wait to take Social Security, let's say you're healthy, you're still working, and you're like, you know what? I don't need to retire at 67. My goal is to make it to 70. For every year that you wait, your monthly Social Security will increase because you're waiting to collect, right? So you didn't start collecting early. You didn't start collecting at full retirement age at 67, right? And at 68, your monthly amount is going to go up. 69, it's going to go up. And then finally, if you retire at 70, you're actually going to get more per month from the Social Security Administration, right? So the reason I don't have a bunch of figures here is because everybody's situation is going to be different depending on when we were born, depending on our work history, and depending on when we retire, right? But on average, for every year that you wait, your monthly Social Security benefit will increase on average by about 8%, right? It'll increase by about 8%. So a lot of people say, well, I'm going to stretch this out. I'm going to try to take Social Security as late as possible so that I get a higher monthly payout. Well, that's part of what you should be considering. The other part is, if you started collecting Social Security at 62 versus the person who collects at 70, that's 8 years where you've been adding to your income through Social Security. So even though you're getting a lower amount because you started at 62, you've been collecting all of that for 8 years, right? Versus the person who decided to wait, yes, they're getting a higher monthly, but you've been collecting for 8 years and now they're just starting. So something that you'll have to integrate into your planning when you decide to retire is looking at what is going to be my payout at 62, at 67, and then what if I wait? What if I don't need Social Security and I wait and I take a higher payout? What is going to be sort of the difference between waiting or just collecting it all along, even though you're getting a lower amount, right? So that will have to go into your individual planning. Now, I also have on this slide some more information in terms of that survivorship benefit. In what situations are family members eligible to receive Social Security benefits that are sort of situational and situation specific? Okay. So if you notice these check marks here, a widow or a widower as early as 60, not even 62, but 60, or age 50 or older, if disabled, can begin receiving Social Security survivorship benefits. Okay, so a widow or a widower, their spouse has passed, right? A divorced spouse, if you've been married, if you were divorced and you were married for 10 years or longer and you haven't remarried, you can start getting Social Security benefits from that ex-spouse because of that ex-spouse. Now, if you've remarried, that's a different situation because now you're connected to that new spouse's benefit situation. Surviving spouses caring for children younger than 16 or children who are disabled can also get Social Security disability benefits because of the child. Children can begin receiving Social Security disability benefits and survivorship benefits if they're under the age of 16, younger than 19, and they're enrolled in elementary or secondary school, so elementary, middle, or high school, right? And then surviving parents age 62 or older who are dependent upon you for at least half of their support. That situation is a little bit more unique, where if you've passed and you had parents who were relying on your financial resources, then in that situation, they could get a portion of your survivor benefits. Okay. So there's a lot of sort of unique situations that is sort of individual and sort of specific to the individual. And I can't speak to every single one of those because everybody's is different. But I put this here to let you know that there are unique situations in which the Social Security benefits may apply to you, could apply to you early, or it could apply to people in your household. So let's walk back through this, and let's talk about some of the key takeaways. Let me go back a slide. So why is this giving me trouble? There we go. So 3 types of benefits: retirement, disability, and survivorship benefits. Okay. Again, this is only providing a portion, a replacement, 40% replacement, a partial replacement of what you're making during your highest earning years. So it is absolutely critical that there is financial planning involved beyond just, well, I'm going to retire, I'm going to start taking Social Security. Statistics show that in retirement, most individuals' expenses do not go down. Most expenses do not decline in retirement. So a lot of people will say, well, Bryan, you know, I'm not going to have this expense. I'm not going to have that. I'm going to be using less gas. I'm not going to work. I'm just going to sort of live frugally. I'm going to pay off this, pay off that. And what we find more often than not is in retirement, expenses stay the same, if not increase. Why? Because all that time that you were spending working, earning money, you're now trying to find ways to do other things, right? So I don't know, maybe you take a vacation, you travel, you're spending more time with grandkids, you're taking up other hobbies, you're taking up other interests, you're spending money. And you might not be spending a lot of money, but you're spending more than you're actually earning, than you were in your earning years. And so that money is not being replaced. So you're drawing down on those retirement savings, and Social Security just isn't going to be enough to cover the same sort of expenses, if not higher expenses. So something to just be mindful of and really be looking out for in your planning. Okay. Remember, the benefit amounts are going to depend on when you decide to retire, whether it's 62 or 75, right? Depends on your date of birth, right? And one last thing that I want to mention is, and people ask me this all the time, is Social Security taxable? Yes, it is. So that's even less that we're going to have in our pocket when we're retired, because a portion of our Social Security is going to be taxable. But I want to just mention one sort of like caveat or disclosure here, is that if you were to only rely on Social Security, that's it, that was your only income, say, remember we said on average, American worker in 2020 is getting about $1,500 a month. If you were making that 18,000 in Social Security, and that's all you had, obviously you're really not going to be paying any taxes on that 18,000, right? So in that way, you could sort of see that you would collect your full Social Security, and it, you know, it wouldn't really be going to taxes. But because people supplement Social Security, and maybe they pull from an IRA, and maybe they pull from a 401k or a workplace retirement account, and some people, even while they're collecting Social Security, they're still employed. Maybe they have a part-time job, right? Because we want to keep ourselves busy. We like the additional income. All those sources added up together could put you in a tax bracket where you're being taxed on all that income as a total. And so in that way, Social Security is taxable, right? So that's even less at the end of the day in our pocket. So just know, yeah, Social Security is taxable because it's going to be added to your overall total earned income. That's going to put you in a particular tax bracket, and there's a percentage of that is going to be taxable. So this is sort of the big picture of Social Security. And if you are thinking about retiring, if you are getting close to making a decision about Social Security, if you're a couple of years off even, if you're even approaching 60 and you want to say, Bryan, like, this is going to come quicker than I'm planning. I know it will come fast. I want to talk about what 62 will look like. And I know Social Security Administration Office is not going to want to just sit down and chat about this. If you want to do some planning, if you want to take a look at this, if you want to look at specific numbers, I can sit down with you over Zoom and we can sort of talk about your scenario, and I can help walk you through how to plan for Social Security and how to make Social Security a part of your overall personal financial plan as you head towards retirement. And so if you're interested to see how's that all going to look, how am I going to piece together all these different streams of income, I'm more than happy to do that with you and for you. And that is a free service that is being offered by Family Promise of the Verdugos. There is no charge to you for that. We would just have to do it virtually in this pandemic environment, which we're all definitely used to at this point. So definitely reach out to Lisa, our new case manager. She's the one who sent you the link to today's session. She's the one who is letting you know about future and upcoming workshops. She's the one that puts all this together. So I greatly appreciate her, and you can reach out to her, send her an email and say, you know, I do have more specific questions about Social Security that I need to ask Bryan. She'll connect, but basically we'll get you the help that you need. And speaking of our next workshop that I'm doing, and let me just move the slide. I was going back and forth there for a sec, you probably saw, is actually on April 1st. That's the next one that I'm doing for Money Matters. And it's April Fool's Day, but it's not a joke. We are going to be talking about protecting yourself against identity theft. I'm sure at this point we're in a position where we've probably experienced this in some way, shape, or form. Whether it's somebody spending on your credit card, somebody spending on your account, maybe there's charges on your credit report, your credit history that you never made. People using your name, people using your identity to open fictitious accounts, to spend on your accounts. We're going to talk about all that, how to protect yourself. That's April 1st at 6 p.m. And I do know that there are other workshops going on as well. I don't know, Lisa, if you want to mention maybe some topics that are coming up that I just am unaware of.
Yeah, so next week we're going to have an H&R Block workshop. And those of you who have not done your taxes yet, and if you're a first time, if you guys have never done your taxes with H&R Block, they're offering $20 off for doing your taxes through them for a first timer. And yeah, join us next Thursday at 6 p.m. There'll be a quote at the very end of the workshop. So try to get on. Yeah.
Yeah. That is definitely a great benefit. And we did talk about taxes before, but I know H&R Block will address, a lot more specific questions. So make sure you tune into that one next week. And then I'll be back on April 1st to talk about identity theft. So thanks to everybody for attending this evening. We really appreciate it. And again, if you have questions, please connect with Lisa. She'll either get you the answer or she'll connect with me and we'll get the answers to you. And we can also definitely set up a time to talk as well. So thanks to everybody for attending. Have a great weekend. We'll see you soon.
Bye. Thank you, guys.
Thank you too. Bye-bye.